I was on the wrong side of Tesla. But stay till the end and I'll show you what I'm watching for Tesla before the close today. Yesterday I lost $234 on a Tesla 0 DTE options trade. Not because the setup was impossible, not because the market was unpredictable, but because I stayed on the wrong side of the trade, even after I knew it. In this video, I'm going to walk you through exactly what I saw, what I did, where I went wrong, and what I should have done instead, so you can avoid making the same mistake. Let's start with the bigger picture. Early in the morning, I was watching SPX and NASDAQ. Both were showing initial strength. Apple and other big tech stocks were moving in a positive direction. Because of that, my bias started leaning toward the idea that we might get a bullish run during the session. At the same time, I noticed Tesla had just made another recent swing bottom, and Tesla is known for moving 10 or more points up or down in a single day. So naturally, the thought crossed my mind. If Tesla catches upside momentum, this could be a nice opportunity for calls. While watching Tesla's price action, I decided to focus on the 430 strike call option. At that moment, the option was trading around 77 cents. I placed a limit order at 42 cents. Why 42 cents? Because when I zoomed out on the option chart, I noticed that 42 cents lined up with a previous swing low in the option price. If Tesla pulls back briefly and then continues higher, I could get filled near that swing low and ride the bounce. At approximately 9:30 Central Time, Tesla formed a small pullback candle. My order was triggered. I got filled at Tesla 430 strike call, 42 cents. About 30 to 45 minutes later, the overall market started shifting. SPX began to roll over. NASDAQ started selling off. And this sell-off wasn't random. It was actually aligning with the original daily trend, which was bearish. That was my first major warning sign. But instead of respecting what the market was telling me, I held. As Tesla continued drifting lower, I made the worst decision possible. I added 3 more contracts at 22 cents. At that moment, my mindset changed from, I'm following a trade plan to, I hope this comes back. Hope is not a strategy. Hope is how accounts get damaged. SPX sold further, NASDAQ sold further, Tesla followed. Tesla eventually resumed its larger bearish trend, and because I did not cut the trade, I lost the entire amount I put into it. Here are the 3 biggest lessons. 1. I should not have traded Tesla calls at all. When a stock is trending bearish on 2-hour and daily charts, it usually either continues in that direction or forms a clear reversal pattern like a doji, hammer, or base. Tesla had not shown that yet. 2. I should have waited 1 more hour. Waiting would have shown clearer structure, clearer trend, and possibly a put options opportunity instead of call option. 3. The moment I realized the trade wasn't working, I should have exited. Not averaged down, not hoped, not waited. Small loss is a win. Big loss is a lesson. One more thing I want to say. Trading is actually simple, but we as traders are the ones who make it complicated. We look at too many indicators, too many opinions, too many scenarios. In reality, price action alone already tells most of the story. When you combine price action with index movement and overall market direction, you already have enough information to make solid decisions. Most losing trades don't happen because we lack tools. They happen because we overthink. We second guess, we hesitate, we hope, and that creates more mess than clarity. So the real edge in trading isn't a secret indicator. The real edge is simple chart reading, following market direction, cutting losses quickly, and staying disciplined. Trading isn't about being right all the time. Tesla quick analysis for tomorrow's setup, based on today's price action. Let me also give you a quick update on Tesla today, February 5th, 2026. Tesla initially opened in negative and tried to recover for first 15 minutes after the open. But shortly after that, the stock sold off further. Price dropped down to a low of approximately 387.55, which became the low of the day. After tagging that level, Tesla started to pull back up. Now, when I zoom out and compare today's price action with previous swing lows on the chart, this structure is starting to look like a potential doji-style day. That tells me Tesla may be in a pause or decision zone rather than a clean trending day. And when Tesla forms a doji on higher timeframes, it often leads to another volatile move the following session. So that sets up an interesting situation going into Friday. Friday outlook. Where is Tesla headed on Friday? The honest answer is, we don't know yet. It will largely depend on how the overall market opens, what SPX and Nasdaq are doing, and whether buyers or sellers show real control. That's why I'm not forcing a Tesla trade today. Plan into the close. I'll be watching how Tesla closes today. If I decide to take a Tesla trade near the close, it will be with one thing in mind: low risk, high reward. And if I do take that trade, I'll walk you through the setup, the reasoning, and the result in tomorrow's video. What I am trading instead. Instead of Tesla, I've been focusing on SPY and Apple options contracts, specifically at the money options. I'm taking quick bounce trades, grabbing profits, and getting out. I've already taken Apple and SPY trades today and locked in decent profits for the day. That fits my goal for the day. Low risk, fast execution, quick exits. Here is today's Apple 0 DTE option trade. Quick entry and exit. Give me nice profit. Here is today's SPY 0 DTE option trade. Quick entry and exit. Another nice profit. Until then, happy trading. Protect your capital. I'll see you tomorrow.